is Ayush Alavadi and you're watching Primetime on Bloomberg Quint. Let's have a look at today's headlines. The Modi government doubles down on its affordable housing push, increases the carpet area of houses eligible for interest subsidy under the Pradhan Mantri Awas Yojana urban by 33%. The International Energy Agency, or the IEA, warns of a supply gap in crude oil in 2019, says output from Iran and Venezuela could slump by almost 30%. The US Federal Reserve is almost certain to raise interest rates by 25 basis points tonight. Investors will focus on whether the panel will signal 1 or 2 additional hikes this year. Markets extend gains for the third straight day, while the Indian rupee weakens to a 2-week low ahead of the US Federal Reserve's rate decision. And the United States, Canada and Mexico will host the 2026 Football World Cup after their joint bid beat Morocco's proposal. All right, let's start off with our top story for analysis for the day. The Modi government decided to hike the carpet area of homes eligible for interest subsidy under the Pradhan Mantri Awas Yojana for middle income group, or MIG, yesterday. Carpet area of houses under the scheme was raised from 120 square meters to 160 square meters for the middle income group 1 and to 200 square meters from 150 square meters for middle income group 2. Sajid Mangat joins us now. Sajid, this has to have a huge impact on developers and, of course, for the consumer as well.
There has been a demand from the various quarters about why should there be a cap on the carpet area part of it, because government has anyways put in a limit of subsidy, which is the credit linked subsidy scheme, under which they do subsidize the interest payments which are paid by the home loan owner. But what government has basically done is that in the middle income group, which is group 1 and group 2, which comprises of people up to income of 12 lakhs and 18 lakhs, they have basically said that we will increase the carpet area for them from 120 to 160 square meter, and for MIG2 it from 150 to 200 square meter, which basically means that you're looking at on a square foot basis, we're looking at somewhere between 1800 to 2500 square feet houses, which will now be coming under the same scheme here. The impact is going to be little incremental in nature. Okay. It's not going to be big, because it is going to be limited only to the outskirts of many of the big cities. It's not going to be in anything to be doing it like in Mumbai or something. So
tier 2, tier 3 cities.
Tier 2, tier 3 city, or suburbs or ultra suburbs. Nowadays cities are expanding, so it will do it. Or like in the case of Pune, is something like Chakan area, which is extremely on the outskirts of Pune, or those kind of where people tend to buy houses which are larger in size. Now 25, you can get a house between 18 to 25 lakhs there, and you will be able to get a house of 1700 to 2500 square feet. Now those are huge houses basically. Now these are carpet area. If you put the built-up area to it, you're looking at 3000 plus square feet flats, residences or houses, which is going to be there. So it's only a marginal increase which is there in that sense, because there is a cap to the income level where government is going to provide subsidy there. So yes, it is a good move because it increases the carpet area, allows some of the middle income people to go and look for bigger houses, but at the same time it does not increase the pool of people, because the pool of people remains the same, and there's a cap on the income level.
Okay, interesting points, Sajid. I want you to stay on with us in this discussion, because to take this further and to understand and assess the impact, we're joined by Rajiv Talwar, Chairman of NAREDCO. He joins us live from New Delhi. Mr. Talwar, thanks so much for speaking to us on Bloomberg Quint.
Good evening, please.
My colleague Sajid Mangat just mentioned, based on his analysis, perhaps it would be an incremental impact, so to speak, and not necessarily increase the pool of beneficiaries. I want to understand, how you assess this move and what kind of impact you think it would have on developers and, of course, on consumers as well.
Yeah, actually, we had demanded this because in Tier 2, Tier 3 and Tier 4 towns, it is very much possible that homes of this size, as your colleague rightly said, would be available at a cost of something like 18 to 25 lakhs. And these two groups cover annual salary of 12 lakh, up to 12 lakhs and 18 lakhs. Therefore, we think that a large number of developers in the private sector would also step in, cost of land being low, cost of construction being low, will step in and provide that boost to housing. And at the moment, the Prime Minister's Awas Yojana was kind of getting limited to the big towns where NBCC or other organizations were coming in, and land was a little expensive. So government land was being used. Hopefully in future, public sector lands would be used. But in smaller towns where private lands would be available at a moderate cost, we are quite certain that given the credit-linked subsidy scheme, this will provide a huge boost to not only rural employment, but also fulfillment of housing targets, because whether it's a big city or a small town, large number of people do stay in shanties. And I think we would soon come to a time when in the smaller towns, they would disappear much faster than in bigger cities.
Mr. Talwar, this is Sajid here. I just wanted to check with you. If you look at the National Housing Board data which comes out, it basically clearly states that the largest number of loan seekers are from Maharashtra, followed by Tamil Nadu, then Karnataka, Gujarat, Madhya Pradesh. Do you see a lot of house building activities now coming into all those areas outside Maharashtra? Because many of the Maharashtrian cities are now anyways, the cost, land cost is already going up for them, and
Correct.
so you will have Gujarat or Madhya Pradesh or to that extent some of the northeastern states where land costs are much lower. So you see a lot of activity happening there.
Yes, and why only there? I think Uttar Pradesh, Bihar, Jharkhand, Madhya Pradesh, Chhattisgarh, Rajasthan, I think these areas would definitely get benefited, and a large number of people who build traditional kind of homes would not only get a business opportunity, but also would be able to provide large-scale employment. I think that's the kind of movement which will take place, and with a credit-linked subsidy scheme, your EMIs would be lower, and hence larger homes, more manageable homes would be available in a very, very large number. So I'm quite confident that the government, which has been taking, regular steps, and in big cities, they have provided 60,000 crores. I mean, that's the kind of money which is being given out. Almost 50 lakh houses are already under construction under the affordable housing scheme. I think the government, under the Prime Minister and under the present Minister, Mr. Hardeep Puri, are doing a marvelous job, and I think this is yet another step to provide housing and fulfilling the shortage in smaller Tier 2, Tier 3 and Tier 4 cities.
The demand for these houses also links to job creation in these areas, because you need to have a lot of services based jobs being created in these areas. Otherwise you are going to build houses, but either people will buy it for investment purposes, or they will not be bought at all, and they will be just inventory lying in the books of housing companies. So do you see that kind of activity also happening on the ground, because you are one of the part of the biggest developer groups? Do you see activities happening in these areas like UP, Jharkhand, Chhattisgarh, where a lot of services and job creation activities also happening?
Yeah, I mean, while I'm not talking about our group, because we are normally in the bigger cities, but I think a large number of traditional builders who build ground floor homes or ground plus one, they would come into play in a very strong way. And this is not limited anymore to just a few companies, because this kind of technology is well set in India. People were not getting the finance, and people were not getting enough buyers in that, in that pay scale. I think this credit-linked subsidy scheme and making a house larger than 1,500 to 2,000, 1,500 to 2,000 square feet, I think that would be a great booster, because people are used to those kind of houses in smaller cities. And that would prove a great boon, not only for employment, but also for demand, as you said, that yes, would there be demand? I'm sure with the increase in construction activity, you'll have a huge turnover issue and therefore more jobs and more disposable income to be invested into homes. And homes are a very major demand issue for emotional security as well as financial security in any small town. I mean, it's a great boon to have a house and a permanent house, over in your name.
All right, Mr. Tawar, thanks so much for joining us on Primetime and sharing your thoughts on this particular story. Now, just to take this further, we're also joined by Harshal Mehta, Joint Managing Director and CEO at DHFL. He joins us on the phone from Mumbai. Harshal, thanks so much for speaking to us on Bloomberg Quint. Now, I'm guessing you were tuned into that part of the conversation, but I just want to get your take on this. Considering, we're talking about this as a big boost for affordable housing and the Prime Minister's Awas Yojana as well. And of course, the fact that the Reserve Bank of India actually revised their housing loan limits for the priority sector lending eligibility as well. Putting both of these things into context, do you think this augurs well for the construction real estate sector?
See, the way we look at the announcement which was made yesterday is that, this is not leading to creation of a new supply. But what is happening with this is by increasing the area in the MIG space, it is supporting more set of people to be eligible under PMAY. If you do a back of the envelope calculation of this entire new enhanced area which becomes effective, this typically results in a situation of MIG1 and MIG2, which is an income ranging between 12 to 18 lakh rupees. And if you look at an area of approximately, let's say, 1,400 square feet or 1,500 square feet in the revised guidelines, the back of the envelope, this is the income and the loan eligibility and the 20% down payment. It all translates into a ticket size of close to 50 lakh rupees. Or in terms of an area per square feet, it is about 3,500 rupees per square feet, which is what typically you would find in a tier 2 market or a tier 3 market, where there is an inventory, there is a sale which is happening, but those people fall in the income criteria, but are out of the scope of the existing scheme which was available because the area in the scheme was lower, whereas the carpet area here which was sold was higher. So suddenly now this set of people, by virtue of an increase in an area, is now eligible for PMAY. As a result of this, we believe that typically the existing stock which is out there, it ideally should support in liquidation of the stock. And as a result of that, you would have more beneficiaries in this scheme.
Mr. Mehta, this entire circular is effective from 2017 onwards. So is it fair to assume that people who missed out or were on the margin at that point in time will now get included in the scheme? And how does it work from a housing finance company point of view?
No, that's a good question. In fact, yes, this is effective retrospective of 1st of January 2017. Now, if you look purely from a DHFL perspective, we are already in the process of identifying those set of people who meet the income criteria, but got missed out because of the area criteria. Because if you see, the only change is in the area, carpet area, right? So you are identifying those set of people who who were not eligible because of the area. Now, what we are going to do is, we are going to run the query in the system, identify the set of people who now fit into the area criteria, and then reach out to those set of people that, look, you are now eligible under PMAY, and we need the following, because then you have to redo some of the work in terms of this is the first house and household income and so on and so forth, and get working on that. We believe that this will lead to a situation where you will have now those set of people who got left out. There will be some set of people who would now be eligible under this new scheme.
Mr. Mehta, in the last 1 year, we have seen that a lot of home loan sales or disbursement that have happened. A large chunk of that has been under the this current scheme, CLSS scheme there, not only for you but for other home finance companies as well. But the biggest feedback which is coming from the ground is that even though there has been a lot of registrations or loan disbursement happening, the dispersal of this subsidy has not happened so far, and it taking more time for the subsidy to go back to the accounts of the loan seeker. Are you also seeing that happening at your end? And because the money is not been dispersed by the government and it's not coming back to the home loan seeker, there is a issue with respect to some kind of queries coming in, and there is also some issue of back and forth which is happening between the bank and the customer.
Okay. See, I would respond to this from a DHFL perspective. See, if you see, CLSS scheme has been there for a while. Okay. What the present government did was they got in additional MIG1 and MIG2 and gave a lot of boost in terms of how to push this forward. So the essence of this is that CLSS scheme has been here for a while. So between the HFCs and the nodal agency, which in our case is National Housing Bank, there has already been a system in place where you have a format, you upload the data on that basis, and they process it. So from our perspective, this is something which we have been used to for a number of years together. So in addition to this, this is now MIG1 and MIG2 which started falling in place. So for us, this has been a very, very smooth process. The payments has been prompt enough. We have been able to credit to customers' account, and we have received positive feedback from the end customer as well, because they clearly see the money coming into their loan account and the EMI getting reduced. There could be stray incidences from others in terms of how they are adjusting to the system. But as far as us, DHFL and NHB is concerned, the process is well set. You have a batch system. You can't keep on sending one claims to them. So you upload it. So you may want to wait for a while to have enough data, and you upload in the system and they process it within days and credit the money. So I would say that the payments has been, subsidy claims has been released promptly.
Would you have also liked the entire income bracket to go up above 18 lakhs, considering that affordable homes which come under priority sector lending, that band has been increased from 20 to 25 lakhs in the last policy?
See, in our opinion, I think what the current levels are addressing adequately the true LIG and the true MIG of the country. If we are just going to always isolate the top 4 cities and continue to say that, look, in an income of 18 lakh rupees, with property price so much, it is no longer affordable. But we have to also understand that, at the base of the pyramid or in the middle of the pyramid, there is this huge segment which sees tremendous amount of benefit coming in by way of this subsidy, which is ranging between 2.3 to 2.6 lakh rupees. So our house view is that the current income levels which they have defined is addressing adequately the right segment in terms of your affordable housing, which also has been defined by Ministry of Housing to that extent. So we believe that this is fine. In addition to that, the booster is the recent RBI guidelines for metro locations, upping the limit for PSL, and for non-metro locations, upping it 25, which I think is very fair.
All right, Mr. Mehta, really appreciate you joining us on Primetime and sharing your thoughts. And Sajith, thanks so much for that analysis as well. Now, moving on, Elon Musk's decision to dismiss 3,000 employees from Tesla shows that the company has reached a seminal moment. The company has lost about $5.4 billion, and Bloomberg analyst estimates show that Tesla is likely to lose another $1.3 billion over the next 4 quarters. In a note which he uploaded on Twitter, he also said, while profitability does not motivate Tesla, it is important to be profitable to achieve the mission of achieving sustainable, clean energy. Now, Kevin Tynan from Bloomberg Intelligence joins us live on the show. Kevin, thanks so much for speaking to us live on Prime Time. I just wanted to get your thought on some of these developments. Essentially, Elon Musk has, to some extent, alluded to the fact that Tesla will be looking at profitability going forward. It's not just about creating, the affordable electric sedan. There's a lot more to it. And perhaps he has succumbed to, pressure from investors and the market.
Well, the shares certainly aren't showing that kind of pressure. They've been going up in the last several weeks and actually reacted favorably to this announcement. I think the timing is very interesting of the layoffs and the size, the 3,000 workers or the 9% of the jobs, and talking about profitability now, 15 years later. They're still in a growth phase. They still need to get Model 3 production up to 5,000 units per week. So the timing to me is probably more interesting than anything, that 15 years later you're going to start talking about profitability.
Right, Kevin, and also, over the last few months, we've seen how it's been a tumultuous time for Tesla, considering some of those delays that have received a lot of harsh criticism, so to speak. But a couple of things in that email which seem to have caught my eye, and this was, of course, an internal email, an internal memo, which was leaked apparently, and then he put it out on his Twitter. The one point being that I also want to emphasize that we are making this hard decision now so that we never have to do this again. That's one key takeaway, and two, the fact that he goes on to talk about, like I said, profitability. Is this a marked shift in the way Elon Musk is approaching the whole situation, or considering how he has over the years?
Right, it would certainly seem that way. Again, that talking about profitability now of all times, and to your point about hoping to never have to do this again, I'm sure that every CEO shares that sentiment. But if you think about the products that they've announced, semi-truck, another Roadster, and the Model Y crossover, they have a lot of products. They only have one factory. They'll need another gigafactory, at least one. They'll need another assembly factory, at least one, to build those products in, because the Fremont facility that they have is really packed to the gills. So the idea that they're going to continue to expand at this great pace and have the right amount of staffing at all times is probably a big task. I would think that if you miscalculate demand versus your supply or your production capacity, you're going to be going through headcount reductions at some point in your future as well.
Really, Kevin, and it's kind of interesting that while he does bring up some valid points in that internal letter as well, he also says that he brings up an interesting point, and this is something perhaps that will be dissected and analyzed in the coming days. He says, we are a small company in one of the toughest and most competitive industries on earth, where just staying alive, let alone growing, is a form of victory. Tesla and Ford remain the only American car companies who haven't gone bankrupt. One, the fact that he made that sort of a comparison or that analogy, and two, the fact that a lot of commentators are also suggesting, and people who track Tesla and have been for the last few years, that although they haven't gone bankrupt, some would say, and they have gone to the extent of saying that they are heading on the path of being structurally bankrupt, so to speak. Is that a concern, Kevin?
Yeah. It certainly is, and I think there's two parts, or there's many parts to the Tesla story, but two interesting halves of it are, one, that the product is very well received. People are passionate about it. It's an American automaker that was successful in bringing at least to this point, three vehicles to market. But the other side of that equation is the profit story. And it's one thing to have a successful product. It's another thing to have a successful business. And the automobile manufacturing industry in its 100+ years of history is all about volume. It's very low margin, it's very high volume, and that's really how you get sustainable profitability out of being, somebody who bends metal into the shape of cars. So the industry that they chose to go into in terms of the sustainable future is probably the most difficult one. It's very easy to be a technology company and command these kind of valuations that Tesla does, it's very difficult to be considered an automaker and get those kind of valuations and those kind of margins, which they've been fortunate enough to get to this point. But the more they're perceived as an actual automaker and less as a tech company, the more difficult it gets.
You know, Kevin, those are some interesting thoughts. As a last question, I just want to figure out what your take is on this, because considering the company, has had issues, has not, and has, been burning cash, and there are projections that they will have to burn, despite these job cuts, will be burning more amounts of that. What I want to understand from you, Kevin, is considering that this is a 9% cut in their workforce, are there concerns in the US right now, and especially at a company like Tesla, that there could be further job cuts in the future as the company looks at a path of profitability?
Yeah, and again, keep in mind these job cuts were of salaried workers. These were not the production workers. So the idea that they need to get Model 3 production up to 5,000 units per week, none of these cuts affect that. This would be, though, looking even more forward to say the production planning, the design, engineering, and those jobs, budgeting and things like that are where the cuts had come. So you wonder about, can you stay on this growth trajectory with fewer people in the corporate part of the business. So I think in the US we're here in terms of total volume, and not just electric vehicles, this idea that we're late in the cycle and that we peaked in 2016, but the level will be good. So I think the demand is sustainable. It's just a matter of Tesla right-sizing their company to demand for electric vehicles, which is still very low here. Right-sizing that supply and that growth rate to the demand that's out there.
All right, Kevin, really appreciate you joining us live from Princeton with that analysis. Now, moving on, International Energy Agency has said OPEC members Iran and Venezuela could lose almost 30% of their oil output in 2019 due to US sanctions and economic upheaval. This means that the other members of the OPEC have to produce more. In its first forecast for 2019, the IEA said that the US shale oil should be enough to cover excess demand, but open national like Saudi Arabia may need to boost output. This comes ahead of next week's OPEC meeting, where the issue of production cuts will be discussed. Warren Patterson, commodities strategist at ING Bank, joins us on the phone from Amsterdam. Warren, thanks so much for speaking to us. I wanted to get your take on this. How seriously should all of us be taking this warning put out by the IEA?
Thanks. Good evening. So I think basically the IEA's report was a warning to, or a signal to OPEC that, okay, you've achieved your goal, you've brought down global crude oil inventories back, or actually below the 5-year average. It's time that you start easing those production cuts. And it's come in a timely manner, as you said, ahead of the OPEC meeting next Friday, where there really is a growing consensus, given the pressure from mostly Russia, that we could start to see an easing in those production cuts, which is what we feel is needed, given the constant downfall we're seeing in Venezuelan production, along with the risk around Iran, given U.S. sanctions.
Right, Warren, also when we talk about other OPEC nations, say Saudi Arabia, what kind of, how could you comment on the capability that they'd actually have to offset some of these output losses?
Yeah, I mean, Saudi Arabia has basically has 60% of the spare capacity out there. So if we look over the course of the OPEC production cut deal, Saudi Arabia's compliance has been very good. Their compliance since the beginning of 2017 has been at 120%. So in our view, Saudi Arabia could in fact actually increase production by 300,000 barrels a day between now and the end of 2017, and their compliance with the OPEC deal would still be 100%. But obviously, if we continue to see further shortfalls from Venezuela and the risk around Iran, there's the need that they will have to bring on more capacity, which we believe that they do have.
All right, Warren, I want your take on one last thing as well. In 2011, the OPEC didn't respond to the IEA's recommendation for more supply. During Libya's civil war, of course, the agency unlocked its emergency stockpiles in that case. Do you foresee a repeat of that situation in 2019?
Don't think it's going to be as severe. I think what we need to factor in is the fact that Russia is part of this deal. And they've really helped to hold it together along with Saudi Arabia. But they've made it very clear, leading up to the meeting next week, that they want to see an easing in those production cuts. I mean, just yesterday there were reports from Bloomberg where there were reports within Russia that they were hoping to ease those production cuts and see 1.8 million barrels a day of supply brought back onto the market. So I think either way, Russia is very intent on increasing their output moving forward. And I think that's going to help with the fact that you've got Donald Trump, who's been tweeting away, basically saying that he won't accept these higher oil prices. So he'll be putting pressure on Saudi Arabia as well to ease these cuts.
Warren, that brings me to my last question. What's your outlook like for Brent crude prices in 2018 and, of course, in 2019?
So our base case scenario is that we're going to see OPEC and Russia increase supply by around 900,000 barrels a day by the end of this year. Along with that, we expect Venezuelan production to fall from about 1.5 million barrels a day currently to 1.2 million barrels a day. And we're only expecting around a 500,000 barrel a day loss from Iran as a result of the U.S. sanctions. So what does that mean overall? It means that we expect a small surplus over Q4. And as a result of that, we do expect Brent to trade back towards the high 60s by the end of this year. And then over 2019, given the strong growth we continue to see in U.S. production, we're expecting Brent to average closer to the mid-60s over the course of 2019.
All right, Warren, thanks so much for joining us live from Amsterdam. Now, the U.S. Federal Reserve is likely to raise its interest rates by 25 basis points later tonight when the two-day FOMC meeting ends. The U.S. Fed will also release new projections for rates, unemployment, inflation, and growth for the coming year. Bloomberg News' Matt Bosler joins us now from New York. Matt, a 25 bips rate hike on the cards, is it?
Yeah, so as you mentioned, they're widely expected to raise interest rates today, but the big question is how many moves they're going to signal for the rest of the year. So in March, the last time the Fed put out updated interest rate projections, the Federal Open Market Committee was fairly split between wanting to do 3 hikes in 2018 versus 4 hikes in 2018. So this will be the second hike, and it'll be really key to see what the new projections show. Does the balance tilt a little bit more toward doing 4 hikes this year, or does it kind of stay clustered around 3? And that'll really set the tone going forward.
All right, that'll set the tone going forward. But Matt, what are the other things, other than interest rates, that should be keenly watched out here?
Yeah, so I think the key things they'll be looking at are, first of all, the unemployment rate. So the unemployment rate in the U.S. fell to 3.8% last month and is on track to kind of knock out the projections that they had made several months ago well in advance of what they expected. So there might be a little bit of concern that this rapidly falling unemployment rate may lead to a bit more inflation than they previously expected, which may augur for a stepped-up pace of rate hikes. The other interesting thing is what they say about the balance sheet, because they've made a technical tweak to their operating framework to adjust for the fact that the Fed funds rate has been rising a little more quickly than expected in the last few months. And so that may mean that they have to stop shrinking the balance sheet earlier than previously expected. So it'll be interesting to hear what Fed Chairman Jay Powell has to say about that today as well.
Absolutely. Matt Bosler there from New York City. Now, moving on, Indian markets posted gains for the third straight day. Pharma and IT stocks led the gains. Both the benchmark indices ended with slim gains as they paired their gains in late trade. Agam Vakil sums up the day's market action.
So the benchmark indices gave up a lot of their gains, though they did close in the green in today's day of trade. What stood out in today was the Nifty Pharma Index led by the likes of Cipla and Dr. Reddy's. We did have some strength in the Nifty IT Index too, essentially on the back of TCS and plans for buyback. In terms of the markets and stock-specific action, we did have Delta Corp as well as HUDCO also stand out in trade, in fact advancing by well over 7% for each of these counters. And Idea Cellular and BGR Energy on the other hand on the decline. In fact, Idea Cellular inching towards the mark of 60 again, and we had some substantial weakness and perhaps profit taking in BGR Energy. So these are some of those stocks that we need to watch out for and see whether or not there can be some recovery as we move into trade tomorrow.
All right, another update. The Indian rupee weakened to a 2-week low against the US dollar ahead of the US Federal Reserve's policy decision. The rupee ended at 67.64 levels against the greenback, like you can see on your screen. This is the lowest rupee the rupee has ended against the dollar since the 29th of May. ICICI Bank is all set to sell some stake in its insurance business, ICICI Pru Life. Yatin Mota tells us how much ICICI Bank is planning to sell and how it's planning to use the capital raised.
ICICI Bank has informed the stock exchanges that they will be selling up to 2% stake in its insurance business, which is ICICI Pru Life. Now, they plan to sell up to 2.87 crore shares via various market issuances. Of course, this involves either doing it via offer for sale on stock exchanges or block deals, or in multiple tranches, what the company has informed the stock exchanges. So whatever the mechanism be, ICICI Bank will be selling shares worth nearly 1200 crores in ICICI Pru Life. Remember, in 2016 ICICI Pru came out with their IPO. That was priced at close to 334 rupees per share, and now the shares are trading nearly at a 23% premium to that price. Clearly this means that ICICI Bank is still on a monetization spree. Probably the 1200 crores that it receives, which is of course calculated on the basis of the current market price, would be aiding its capital adequacy ratio. And on the other hand, they will also be able to comply with the regulatory norm, which entails a minimum public shareholding of 25% for listed entities. So from the compliance point of view, they will be able to meet the 25% minimum public shareholding, and on the other hand, probably this capital could be used to augment and aid their overall capital adequacy ratio.
Now, in a much awaited relief for Sun Pharma, the US drug regulator has given an all clear for its facility in Halol. This could pave the way for fresh approvals for its products in its largest market. Darshan Mehta brings us a timeline of Halol's plant's tryst with the FDA and what this clearance means for Sun Pharma. Darshan?
The problem started in 2014 when the US FDA came knocking on the Halol facility, and they gave them a Form 483 with the 23 observations. That was fairly large, and since that time, the trouble started for Sun Pharma. Then what happened was, because of this Form 483, they made some remediation, but nevertheless in 2015 they got a warning letter with 6 important observations which they needed to clear before any kind of approval could come in, and by that time the existing products could be sold, the new approvals were blocked. Then again in 2016 the US FDA inspected the plant again, and they issued a Form 483 with 9 observations post the re-inspection that happened. Again there was this re-inspection that happened earlier this year in February, and that is the time they got in 3 observations, and by that time it was pretty known that these observations are non-serious and Halol would get cleared, and that is exactly what happened. On June 6th on the US FDA website, the US FDA changed the status of the plant to a VAI, which means that no more negative reactions will be taken. Whatever steps Sun has to take has to be voluntary. And finally yesterday Sun Pharma declared that they have gotten the EIR, which means that the plant is all clear. The warning letter will be lifted in due course of time, and they will start getting new approvals. Why is Halol important? A lot of their future injectables are filed from this plant. It's an injectable plant. It contributes 11% to the US sales and 4% to the total sales. The importance has gone gone down post the merger with Ranbaxy because the base became bigger and the problems with the US FDA started. So it paves way for for future products to come in. Spark also benefits because two of their drugs that were supposed to be sold and the approval was there will be manufactured in Halol. So Spark also will react positively to it.
And moving on to a Bloomberg exclusive, Carlsberg is planning a local IPO of its Indian business as it seeks to tap into the market for foreign beer. Anto Anthony of Bloomberg News tells us what an IPO means for Carlsberg in this report.
Carlsberg is looking at an India listing right now. So their India operations would be put into a vehicle and will be listed in the Indian market. Over the next couple of weeks, they will be meeting bankers in Singapore so that they can choose the arrangers for this deal. Right now, we don't know how the deal is going to be structured, but a couple of people have been telling us that maybe Carlsberg will put some of their operations, some of the overseas operations also into this vehicle.
Now, it's almost a year since India adopted the goods and services tax regime. While there may have been some nagging issues and temporary glitches, one does have to acknowledge the fact that it's a very big move towards one nation, one tax regime. And aiding the entire process is a massive back-end system known as the GSTN or the GST network. Nikunj Johri caught up with Ajay Bhushan Pandey, the GSTN chairman, to find out exactly how the system helps the taxman crack down on errant filers.
Historically, the people take registrations under the various tax system. For example, when the VAT used to be there or service tax used to be there, that time people used to take a registration, right? Now, when they take a registration and supposing if there are no transactions, then the tendency is to not to file the returns, right? And if you compare the figures that, in the earlier system, let's say in a particular state, how many people were registered under the VAT system and how many people were actually filing the return. And if you make a comparison, there is a definite improvement in terms of comparison with the earlier system. So there is an improvement. And then our endeavor will be that each dealer, even if he has to file a nil returns, right, he should be able to file nil return by pressing just 3 buttons that I mentioned to you a little while ago. So the whole idea is to make the whole process so simple that a dealer who is a very small dealer and he has to just report certain transactions, he should be able to file returns. We are also, in the new return design, what we are trying to do is that if the invoice itself, at the time of generation of the invoice, if it gets uploaded onto the GSTN portal, then the return automatically gets prepared. So one need not, go and collect the information from all the invoices and transport them onto the returns and then file. Because the returns are nothing but, the informations that are collected from the invoices, mostly, right? So the whole idea is that when the invoices are getting generated and getting uploaded, the relevant information can be taken out by the system to the returns, and then the returns should get auto-generated. And if there are some corrections, some adjustments are to be made, then the dealers can make them. So if we and our attempt is that if we simplify this process, and which we will do, then this will further encourage those who are not able to file returns for one reason or the other.
The GST Council had also approved a set of changes to the return filing framework. So have you initiated the work on that, and how long would those changes, how long will you take to incorporate all these changes in the current system?
Now, the GST Council took a very landmark decision to, because earlier, one had to file 3 returns, GSTR 1, GSTR 2, GSTR 3, and then every month. So in 1 year, 36 returns. Right? We also added GSTR 3B. So in together, there will be like 48 returns, right? Now, what we are trying to do is that all these returns will be replaced by 1 return in a month, right? And it will be a very, very simplified system. The GST Council has approved that. We already have started the work, right? And we expect that in the next few months, we should be able to, to roll out the new return system. parallelly, during the transition phase, we will continue with GSTR 3B and then the new return system, but and then at an appropriate time, the GSTR 3B and GSTR 1 will be withdrawn, and it will be only the new return will be continued.
So GSTR 3B returns would continue for some time as well?
For some time, because we get revenue through GSTR 3B, right? So whenever you try to bring in a new system, there has to be a transition plan. And this is the transition plan that we had presented to the GST Council, and this is the GST Council approved this.
So the GST Council had also approved making GSTN a public sector enterprise. So when would the government buy the stake that is held by private sector entities, and what are the benefits that you see making by converting GSTN into a public sector company which was earlier majorly held by private sector players?
So the GST Council took that strategic decision to increase the government shareholding, state government and central government, to 100% from 49%, because this taxation is essentially a state function, and the state function has to be performed by either the state entity. So this shareholding pattern has now been increased to 100%. Now the procedural formalities are being done. For example, the approval of central government will be required, right? Then the state also has a 24.5% at this point. Their shareholding also will have to be increased, right? Central shareholding also will have to be increased. So we'll have to take approval from the central government and all the state governments which are participating in the GST, the council, and then they also will be the state shareholder in this in the new structure. So we are undergoing that process, and once that approval is obtained, then the shareholdings of the existing companies which are holding 51% will be transferred to the state government and then the central government, and then this process will be complete. So I hope that within the next few months this process should be over.
And so will making GST turning into a PSU make it liable for CAG audit as well, which wasn't the case earlier, since it was majorly held by private sector players? So
I hold that the CAG audit is a good thing, because even when GSTN was technically a private entity, we on our own we had offered that all our activities should be audited by CAG, and CAG did conduct audit of GSTN, and now that it is also now a 100% government company, then it will get audited by CAG. So the CAG audit is a good thing, because if any taxation system as I said little while ago, that is essentially a state function, right? And it's a state function, and therefore CAG is constitutionally empowered to audit and point out if there are any areas of improvements or if any mistakes that we are committing. So we should always be open to and encourage audit by some independent agencies like CAG, and which will further strengthen the entire GST system and also the GST network.
All right, it's time for a very startling revelation. The RBI has said that it does not have an internal committee to look into virtual currencies in response to an RTI application. The RBI is part of two committees under the Finance Ministry to study virtual currencies. Remember, the central bank mandated that banks, payment gateway providers and e-wallets withdraw support for cryptocurrency exchanges in India. Varun Sethi, technology lawyer and the person who filed that RTI application, joins us now. Varun, thanks so much for joining us on Bloomberg Quint. I want to start off by asking you what you make of these revelations, because you've gotten that response. We have a copy of us over here as well. But it essentially means that there was no research done by the RBI before the ban. Isn't it it's a shocking revelation?
Yes, when RBI in April 2018 restricted banks to offer their services to all the crypto entities. As a result of that restriction, we filed this right to information application. The answers that we've received from RBI are rather intriguing. One of the answers which mentions that there has been no research that has been done before putting in place this restriction. Furthermore, there has been no internal committee that has been set up to understand the implications and the legality of crypto assets in India. So these revelations are rather intriguing.
Right, Varun, it's interesting you say that, because also based on, the responses that you got for the information sought, there was also talk of, how that there was no dialogue between other countries or central banks around the world, so to speak, who've actually dealt with this in the past, have a particular view on cryptocurrencies, perhaps either looking at a ban, a partial ban, a virtual ban, or even any sort of regulation. Is that something that was also very shocking from the response?
See, in the response they have mentioned, RBI has mentioned that they have not communicated with any other country's central bank. This is again a shocking revelation in the sense that worldwide countries and governments are making efforts to understand this new technology and resultantly doing their own research, setting up committees, and also coming up with certain regulations. We understand that drafting of a model regulation might take some more time, but just to outrightly restrict all the banks in India to offer any kind of services to crypto entities is rather shocking. Also in the written response that RBI has given to us is that they've specifically mentioned that they have not communicated with any other central bank. Say for instance, countries like Germany or countries like US, where there are national level debates going on how to regulate these things. Japan has taken precedence in this thing to allow crypto assets to be termed as currencies. Now, India, being a risk-averse country, might take some more time to accept this fact, but at least more non-ambiguous regulations need to be put in place. Currently, because of the current stance of the government, the ambiguity in the fraternity has only increased.
Varun, another thing I wanted to ask you was, for all of our viewers watching, what really prompted you to actually, file this RTI in this particular case? And of course, if you could share a little bit more about your reasons for doing so and some of your areas of research.
Correct. So in case you see that time period between July 2017 to December 2017, worldwide there was a exponential rise in the value of Bitcoin and other crypto assets. We realized that there were lots of people without any research or without any knowledge of these new technologies. They were blindly just investing for some gains in this industry. What we realized was that since huge amounts were being invested, it also opened up avenues of huge risk being exposed to these investors. We also found out through our research that lots of these investors, especially from India, were retail investors, people who were 20 years of age, 25 years of age, people who borrowed funds and invested in these crypto exchanges, so as to speak. What we realized was that during our research, the government has to make efforts to ensure that there is some regulatory framework in place, because while the Bitcoin price or other crypto asset prices were increasing, we also realized that there were huge scams that were happening. Now the government has to come up with a more non-ambiguous stance on this crypto assets to ensure that at least a retail investor is protected on one hand, yet not lose the technology buzz. So we can learn from experiences from, say, Germany or Japan and put in place a regulatory framework which allows crypto trading in India, and it also should open up avenues. So blockchain technology, as was mentioned in the annual budget this year, it not only is about crypto assets, it has far more other usages. which the government can actually take benefit of. Say, for instance, taxation regime or registry records can be put on blockchain, which makes it more transparent. So those avenues will be missed if the government has the current stance that it has today.
Varun, you know, just going through, well, of course, this is all now you've put out in the public domain. The RTI reply is also on your Twitter handle, and it's been tweeted out there by a lot of people. And also, you sent us a copy. And to be fair, while a lot of the responses, as I'm going through it right now, and we displayed some on the screen, some of them obviously are a typical no or yes, a binary response. Some of them redirect you to the RBI website, and some of them are specific as well. But a lot of the issues that you've raised and the questions that you sought answers for, well, they have said that they are exempted under a particular section of the RTI Act 2005, and have not given you responses. Is there anything in particular from this set of responses that that you were, you wanted something of a more specific answer to, so to speak? For example, your last question in this list seems to be a question on FEMA and whether crypto falls under FEMA guidelines. What do you make of that response?
Correct. I think that was one of the more shocking answers that I received from RBI. It is true that cryptocurrencies, so as to speak, as has been informed by government as well, that currencies per se cannot be issued by any other entity other than the central bank, which is true. However, by giving that answer that crypto assets or cryptocurrencies do not fall under FEMA guidelines, it actually opens up a huge debatable topic. It means that international arbitrage of crypto assets would now be possible if you take this answer as it is, which will be more shocking for the reason that any retail investor without using any banking channel can actually invest in an international exchange and be exposed to more risk. So it is required that a regulatory framework be put in place, or perhaps some FEMA regulation be updated to include cryptocurrencies or crypto assets in the definition of currencies. Though there can be more regulations put in place, it cannot currently be equated with the normal fiat currency. But without regulations, an Indian retail investor would be exposed to international risk.
All right, Varun, thanks so much for joining us live on Bloomberg Quint. And of course, we must tell everyone that this is only based on the response that you've gotten to your specific questions in an RTI, and it only sets up, well, a debate for this, which we will have very soon on Bloomberg Quint. But that was about all the time that we have on this show. Thanks so much for watching. Stay tuned to Bloomberg Quint.